So you're wanting to invest in real estate, but you're kind of curious, can I buy a house retail and still have it cash flow? Now cash flow means that it's paying me more than what I'm putting into the house. Well, in this video, we're going to run the numbers on an example and show you what it takes to be able to buy a house retail and still cash flow. So let's get into it. Hey guys, I'm Chris, your real estate problem solver. I've been an investor and an agent in the Middle Georgia area, so I know a little bit about the investing world. I also host the Real Estate Investors Group for Middle Georgia, so if you're interested, look me up on Facebook and come out to some of the meetings that we have. Now, investing in real estate. If you want to invest in real estate to start your portfolio, the first thing you're going to have to do is learn how to run the numbers. Well, Chris, I don't really like math. Well, I don't care. If you want to get into investing, you've got to be able to run numbers. And whenever I don't like running numbers, just put a dollar bill sign in front of it and all of a sudden it looks a whole lot more attractive. So if you're going to run numbers, you're buying houses, rental properties. We're talking about rental properties here. You want cash flowing rental properties and you're running the numbers and you want to know, can I pay retail for this house and it's still cash flow? Well, let's go through an example and show you if a house will cash flow and under what conditions you can make it cash flow. Now, if you're going to get serious into investing in real estate, the best thing that you can do is learn a financial calculator like this one right here. Now, I got this one when I went to one of our classes, and I'm going to tell you who that is at the end, so stay tuned. And when we get into that, I'm also going to tell you my favorite book that explains step by step, ins and outs of running a financial calculator backwards and forwards, so you will never miss another good deal. Oops, hold on. One more thing. Stay into the end, because if you watch the whole video, I'm going to show you at the end all my mentors, the people that I've learned from, the guys that are in the trenches every day, doing this every day. And I'm not talking about gurus. I'm talking about the real guys that make offers and run deals every single day. And I'm going to tell you who those people are so you can reach out to them, you can go to their classes, and you can learn from them just like I did. So now let's get started. Okay, so let's use 123 Anywhere Avenue as an example. Now this is a house that we just recently sold, so I already know what the numbers are. It sold for about 175 to a owner occupant. But let's run the numbers on this house as a rental because it's in a good rental market. It's a standard brick ranch style house. It would make a good rental property. So let's get into the numbers. So 123 Anywhere Avenue, purchase 175. The area for this house rents for about $1,400 a month. Now, if you take all the expenses that are involved with renting a property, you've got your 175 purchase price, you've got the $1,400 a month rent. Now, out of that $1,400 rent, you're going to be pay either yourself or a property manager, PM, $140 a month, which is 10%. That's about standard. Okay, on top of that, you're also going to be taking out taxes and insurance. Now, in this example, that's about $170 a month that you have to set aside to pay your taxes and your insurance. And then repairs. Even if you buy a rental property that's move-in ready, it's 100% jam up, ready to go, you're still going to need to put aside money per month for the inevitable repairs you're going to have to be doing in the future. Somebody's going to put their fist through a wall. Somebody's going to break a window. The air conditioner is going to go out. Somebody's going to have a dog scratching the door frame, have to replace the door frame. So make sure to set this money aside in a reserve fund for the inevitable repairs that are going to have to be done. And then, of course, you want to make some money. So let's just, for example, $200 a month you want to make. Okay, now if you take all these expenses out of the rent, you've got a net operating income, NOI, of $815 a month. Now you notice that I didn't mention anything about the mortgage. This is where the mortgage comes in. If you pay all these expenses, including yourself, you're making $200 a month, you still got $815 a month to go towards a mortgage. So let's run this number. $815 divided by the $1,400 rent is about 58%. Now this is where you're going to get into the 30 to 40% operating costs. So you know when you go out and look at a house, whatever the house rents for, you already know that the rent is going to have a 30 to 40% of that rent is going to go towards expenses. All right, so let's take that 175 present value, which is the purchase price, your interest of 7%. Now this is running the mortgage, and then a 30-year note. Your payment's going to be $1,164. Now, is this mathing? No, it's not. So that means that you are going to be paying more than $815 a month in a mortgage if you buy this house 100% financed. Now, this is based on 100% financing. That means you don't have any money in this deal. So if you make $10 off of this investment, are you to the good? Yeah, you didn't put any money into it, but you're getting money back out of it. That's what we call in the industry infinite return. So if you can find these, and they're out there, I've got quite a few of them myself, where I didn't put any money into it, but I got money back. So if you can find those and they're out there, go ahead and jump on it. Even if you're not making a huge cash flow, you don't have any money in the deal. And that's what these numbers are based on. Now, I know some of these gurus out here are going to talk about cash on cash and this and that. I personally go by how much money do I have invested in this deal? How much return am I getting on my dollars? Okay, so let's get back to it. All right, so since this rental property is not going to cash flow based on 100% financing, let's see what it will cash flow with. So let's reverse engineer this. You know your net operating income, you've got up to $815 that you can put towards a mortgage payment. So mortgage payment $815, interest rate 7%, 30-year note. That means that you can loan or you can borrow up to $122,500. Okay, so $122,000 is the most that you can borrow and still make this cash flow. Okay, well, where's the rest of the money going to come from? Well, that's probably going to be you. So purchase price of 175, you're financing 122,500. That means you've got to come out of pocket. Your cash investment is going to be 52.5. Now, based on that, your annual cash flow, $2,400. That's going to be the $200 cash flow a month times 12, divided by your 52,500 investment. You're getting a 5% return on your money. Now, this is where you're going to have to decide whether or not that's a good deal or not. Now, depending on which market that you're in, you could be in New Mexico or Arizona where 4 and 5% return on your investment is still good and profitable. Or you could be in Wyoming where, they hold out for 10 or 12%. Know your market and know what the numbers are so you can decide whether or not the return on investment is worth buying into. Let's go with the cash flow part of it. All right, so you've got $2,400 a month that you've got coming in. Let's say that you decide that you want a 10% return, not a 5%. Well, based on 10%, you're getting $2,400 a year divided by 0.1, that's 10%. You've got $24,000 total that you can invest in this investment to get a 10% return on your money. You've got a mortgage payment of $815, which is your maximum, 7% interest, a 30-year note, and your present value, your mortgage payment is $122,500. We already talked about that, which means on top of the $24,000 that you can maximum invest in this to get your 10% return, that means your max offer on 123 Anywhere Avenue is $146,500. Now, is that $175,000? No, it's not $175,000. But in order for you to get a 10% return on your investment, you cannot put any more of your dollars into this than the $24,000, and your mortgage payment can't be more than $122,500. That's where the $146,500 comes in. So you can offer it. They could say no, they could say yes, but that's the most that you can offer and still make the numbers work for you. Remember, these investments have to make sense to you. All right, so let's take the rent of $1,400. Now we've got a max offer of $146.5. You notice a little pattern here? You take the $1,400 divided by the $146.5, and there is your 1% rule. So now when you go out shopping for your next rental property, you can run the numbers in your head, hopefully, and have the numbers right off the tip of your tongue. You know that you're going to be spending about 30 to 40% in expenses on every dollar of rent that you get. So if the house rents for $2,000, you know 30-40% of that is going to be in expenses. If you've got a house that rents for $1,500, you know 30-40% of that is going towards expenses. And then based on that, if you've got a house that is $250,000 but it only rents for $1,800, you know a $250,000 house is going to have to rent for $2,500, 1% rule. If $2,500 is not what the market will allow that house to rent for, then you might want to go find another house. All right, so I promised you that I was going to tell you about my mentors and where I learned all this from. So if you want to learn more about investing in rental properties, there's a couple people that I want you to look up. One is my hero, Peter Fortunato. Now he's down in Tampa, Florida. He is a wonderful, wonderful man. He is a horse trader from hell. I mean, he has got stories that will blow your head apart. Everybody that goes down to see him will tell you, you will not understand the first class. You may not even understand the second class. You've got to really listen. But you just need to go down and schedule time. He usually does about 3 to 4 classes a year. You can go to peterfortunato.com, and I don't know who takes care of his website, but they are usually pretty good about putting up the next class that's coming up. I know his papers class is usually the first weekend in December, so be looking for that one. Next one, to get better at your math, you definitely want to go see Gary Johnston. Not Johnson, Johnston. Okay, look up Gary Johnston. He teaches financial freedoms class on Labor Day weekend and Memorial Day weekend. One is in Santa Ana, California. One is usually in Atlanta, Georgia. And he will go through a 3-day class using that financial calculator that I just showed you. He also gives you a calculator when you show up. But he goes through the financial calculator, all the numbers, running the numbers backwards and forwards, and he gives you a whole lot of examples on where you can tweak these little expenses that are eating you alive, like in taxes, like in Starbucks coffee, in buying that one extra dress or that one extra suit that you just don't really need, and where that money can be invested and how it adds up over time. The time value of money is really, really big with him. So look him up and go see him. And then the book that I told you about that you really want to go ahead and get boned up before you go see Gary Johnston is going to be Invest in Debt by Jimmy Napier. It's a red and white book, this one right here. And this will go through step by step using a financial calculator, backwards and forwards, investing in notes, investing in partial notes, and all that good stuff, which you can add to your portfolio on top of flipping in rental properties. And then from there, you are going to meet a slew of people that can teach you all kinds of things, because there are 2 classes that you're going to. One is in the classroom, which is usually in a hotel lobby, ballroom. And then the other one is out in the hall with all the other attendees that are coming in. You've got investors, you've got mortgage note buyers, you've got landlords, you've got tax lien buyers, you've got wholesalers, you've got flippers, you've got contractors, you've got all walks of life from all different parts of the world that do real estate investing, and they will tell you about John Heyer, the tax attorney, Jeff Watson, the real estate attorney, Bill and Kim Cook, the deal makers. These people are the real deal that do this stuff on a daily basis. They're in the trenches and they know what they're talking about because they're doing it right now. So look these people up, learn from them, and become a better real estate investor. I'll talk to you on the next video.